Okay, great. Thank you. My name is Elliott Ehrenreich. I am the chair of the Business Tax and Estate Group at the Knox Law Firm. Here I have Bill Helbling with me again today, who's an attorney in that group as well. And collectively, our group of business and labor attorneys have been diligently working over the past couple weeks to really identify what has become a rapidly changing environment in terms of both the economic impacts as well as what various governments, the federal government, state government, local agencies are doing to alleviate the burden on all of our businesses, which is why we are here today. So we're going to cover a lot. We're going to cover the loan opportunities, some tax credit issues, and some local agency loans as well, and then hopefully get some good questions to really dive in, because I'm sure we've all read what we're going to present, but it really gets down to the nitty-gritty of how this applies to our own business, our clients, businesses, or our organizations, whatever it may be. So again, just kicking off of how we got to where we are here. March 11th was a key date. That's when the WHO announced that this novel coronavirus, COVID-19, was a pandemic. The issuance of the pandemic and treating it as such has really, wrangled and forced the hands of governments from both the federal to state to local levels to place restrictions on gatherings, business transactions, and basically our entire life as we knew it, turning it upside down. As we've seen, I've tried not to look at my 401k, but as we've seen, the markets have certainly taken a downturn. Supply chains have been slowed, and just business in every way has been disrupted by this pandemic, not to mention our own personal interactions with our friends and families. A little bit after the official declaration of the pandemic, Governor Wolf issued his order that all businesses except life-sustaining businesses here in the Commonwealth must immediately shut down. And that led to even our law firm now working remotely. And so we're all working remotely here, as many of us are in the professional industries, unless we've been given a life-sustaining treatment from the Commonwealth.
Real quick, Elliot, are you sharing the slides? They're not showing up on our screen here. Make sure the share screen.
I just clicked it again. Can you see it now?
No, they're not showing. Sorry, everybody, technology issues.
Oh, hold on, I needed one more button.
There we go, that's better.
There we go. Sorry about that, guys. Okay, do we all see it now?
Yep, we're good now.
Amanda? Okay, great. So again, the business disruption here, it forced physical locations of businesses to close, and as I'd mentioned, forced businesses to scramble together with Citrix and so forth to create their remote work systems and create other issues within the economy, just to make things difficult on all of us here. Shortly thereafter, and what we're here to talk about, mostly today, at least my portion of what I'm going to be talking about, the PPP loan program under the CARES Act. This was enacted by Congress and signed on March 27th, and the CARES Act stands for the Coronavirus Aid, Relief, and Economic Security Act. And so that is the CARES Act, which put in motion the federal reaction through a couple of different ways: the PPP loan, the EIDL loans, which we'll get to, and other items of economic action to otherwise help boost up the economy. So the type of loans and assistance that are available that we're going to talk about today, we have in the federal realm, we have the Paycheck Protection Program, we have the Employee Retention Tax Credits, we have the Economic Injury Disaster Loans, the EIDL loans. We're also going to talk about some state loans and assistance. Bill will talk about that. PIDA loans, as well as some other local loans and assistance programs, ECGRA, and otherwise. So the federal loans and assistance. The main one that we're going to talk about here is the PPP program. That stands for the Paycheck Protection Program. And under the CARES Act, this expanded the ability for businesses to get loans and funded them under Section 7A of the Small Business Act. And we need to kind of look at this through the lens of previous SBA loans, because the government works through the channels that they have. Many businesses may have done an SBA loan before, a real estate collateral loan. That is not what this was done through. This was done through their working capital program, which is called a 7A loan under the Small Business Act. And they entitled this particular expansion the Paycheck Protection Program. So what does the PPP do? So the PPP allows qualifying businesses and organizations, and that's key, the word organizations, that they can apply for small business loans to cover payroll, healthcare costs, mortgage interest payments, rent utility payments, and other interest payments on pre-existing loans. So who qualifies for the PPP? The qualification limits are as follows. Any small business with less than 500 employees, which includes sole proprietorships, independent contractors, and other self-employed persons, otherwise can qualify for a loan under the PPP. This does include, key to note here, which was an expansion, is it does include 501c3 nonprofit organizations, as well as 501c19 veterans organizations. I've been asked this question. Other 501c organizations do not qualify. I know that a lot of, they would qualify as businesses, social clubs, that sort of thing, that are otherwise being hit as hard by the current economic circumstances, unfortunately do not qualify. Another expansion here, small businesses that are in the hospitality or food industry with more than one location, otherwise can still qualify, even if they employ less than 500 workers. And then also there are some changes in certain industries that if you have more than the 500 employees, that you can still qualify for these loans, even if you wouldn't otherwise hit what we'll call the typical, size standard limit of the 500 employees. So this, the 500 employee standard is defined as follows. Qualifying businesses must have 500 or fewer employees during the covered period. That would be from February 15th of this year through June 30th. And for eligibility purposes, what the SBA, how they calculate this is you're going to take your average number of employees, and this includes all full-time, part-time, temporary, leased, and affiliate employees per pay period for the 12 completed months before the entity size is determined. There are some specific, very nitty-gritty rules on this, but for most companies, you probably won't get close to it. But if you do, you can reach out to either us or any other trusted advisors, accountants, etc., to help walk you through those calculations. The 500 employee standard is one thing that we'll note here is that the SBA has what we called affiliation rules, and these do apply to these loans. Basically, what this means is that the SBA lumps together organizations. If we have a business or a client, or you're a business owner yourself that has multiple businesses, if there's an affiliation based upon ownership, whether there's security issues, control, security in the sense of equity security, not in terms of physical security, affiliation based upon management or other identities, these will all get lumped in together for determining whether you have 500 employees. So again, note that it's not just an individual business as to see whether you qualify. you do need to kind of look at, what the common ownership and elements are for a business. And so if there's issues on that, you can dig into those, but do know that it's not just looking at one business to see whether that individual business has 500 employees. The affiliation rules that I mentioned have been waived. If this is particular in the food and accommodation industry, if you have an NICS code that begins with 72, you can have more than 500 employees. Also, an expansion, if you operate a business that is a franchise that has an SBA franchise identifier code, you would now be allowed to get a PPP loan. Well, typically that has not been allowed. And then any other business that has received any sort of financial assistance from the Small Business Investment Act also would now qualify for a PPP loan. Okay, so now what does the PPP loan do? How do we get to how much we can get as a loan? The cap is 2.5 times the average monthly payroll costs, which we base upon a prior year calculation. And if you had any EIDL loan prior to this program, that would be included in there. So how do we calculate that? And now we're going to, like I said, get into the nitty gritty here on the topic. We're going to take the aggregate payroll costs, which we'll get to later, from either calendar year 2019 or the previous 12 months, the trailing 12 months, for employees whose principal residence is in the United States. What we're going to take from that amount is we're going to subtract any compensation for any individual employee that is in excess of $100,000 and any amounts to any independent contractor or sole proprietor, which is in excess of that same amount. What's key to note here is that this does not include non-cash compensation. So for example, if we're looking at the $100,000 level, it does not include any amounts that would be counted in for health insurance or otherwise what we might consider a whole compensation package as HR professionals might present to an employee. It is just the cash compensation. So any amounts over that $100,000 threshold get taken out. You're then going to divide that amount, what we've calculated yearly, divide it by 12, and multiply it by 2.5. And in the rare circumstance that there was an outstanding EIDL loan, we would subtract the amount from any advance under the EIDL COVID loan, because again, that does not have to be repaid pursuant to that program, which Bill will talk about later. Okay, so the loan would be capped at $10 million. That's another qualifier here, and we're talking now about the loan terms. So the loan amount, the 2.5 times multiple that we just figured out, cannot exceed $10 million. Any collateral requirements and personal guarantees of owners are waived. The interest rate is going to be 1% on the loans. There are no prepayment penalties. No payments on any loan amounts that are not forgiven would be made for a period of 6 months. And the maturity date is 2 years of the loan. You may have read in previous guidance from the Act that it would not exceed 10 years. The Treasury Department has said we're going to make the maturity date 2 years because we expect businesses to be back up and running by that point in time. Whoops, let me back up here. Okay, so the use requirement. We have gotten, and this has been an ever-changing landscape from when the Act was signed to when it has been, implemented by regulations and so forth. So we're going to get into how we can really utilize and put these loan proceeds into business. So the regulations have stated that 75% of your loan must be used for payroll costs. Payroll costs include compensation to employees, wages, commissions, etc., cash tips, any payment for vacation, leave, separation, dismissal, payment for group benefits, health insurance coverage, insurance premiums, retirement, and the payment of state and local taxes assessed on that compensation. And if you are an independent contractor or sole proprietor, those commissions, income, net earnings from your business. On the forgiveness side, the PPP has loan forgiveness. So any amounts that you are going to utilize for amounts expended for proper amounts, which would include payroll costs, can be forgiven up to the full amount of the loan, so long as they are spent during the 8-week period following the day that you get the loan. However, 25%, not more than 25% of loan forgiveness can be comprised of anything that is not payroll costs, group healthcare benefits, insurance premiums, mortgage interest payments, rent utility payments, and interest on pre-existing loans. So anything that would not be a payroll cost that otherwise can be utilized under the PPP program, those costs that aren't payroll costs cannot exceed 25% of your loan, and it would not be forgiven. Any of the forgiveness of indebtedness that is done under this program is not considered taxable income to the business. So it would be from an income tax standpoint, it would be neutral. One of the catches as to whether you can have forgiveness reduction is that you have to maintain your workforce. You have to basically have the same number of employees that you had for the previous period from last year, or from this year through February 29th. They want to keep obviously this is to keep people employed, and so the comparison is made to make sure that you're keeping the same amount of full-time equivalents. Similarly, if compensation of employees is cut during this time period, as some businesses may be doing, then you also could be subject to not getting a full amount of the forgiveness. It is key to note, however, that the forgiveness would be on a pro rata basis. It is not an use it or lose it type of thing, like all or nothing type of scenario. It would be on a prorated basis. So how do we apply for the loans? Sample applications have been posted on the website for the SBA. Please note that banks are utilizing separate applications to process this. Banks are the ones that are being charged with administering this initially, not the SBA. And as a result, banks may be adding certain things to otherwise, fulfill their own needs and their concerns with compliance with the Act. Any current SBA lender that had done the SBA 7A loans automatically qualifies, as well as any credit union or to the extent we have, farm credit system lending institutions that are participating. So really it's any bank that wants to participate can participate in the program. If we are applying for loans, you should be to provide information to your lender as to how you got to your loan calculation. That would be your payroll figures. They're likely going to ask for recent tax returns. And they also are going to ask for likely organizational documents. I've gotten, articles of incorporation, certificates of organization, etc. I've gotten requests from clients over the past week to say, hey, I don't have a copy of my articles. Can you please get them over to me? And then if you have any EIDL loan that you got immediately this year, you would want to pass that on to your lender as well. With that, I will pass it over to Bill to talk about the employer retention tax credits. Bill, you can take it from here.
Sounds good. So in addition to the PPP as discussed by Elliott, the CARES Act also provides a tax credit to businesses and nonprofits who are struggling during this unprecedented time. This tax credit is known as the Employee Retention Tax Credit. The ER tax credit allows employers to receive a refundable tax credit equal to 50% of wages paid to an employee for each qualifying calendar quarter. However, the credit per employee will not apply to wages paid above $10,000 for an applicable year. Thus, the maximum tax credit an entity can receive each calendar year per employee is equal to $5,000. The ER tax credit is applied to wages paid during the calendar quarters after March 12, 2020 and before January 1st, 2021. To qualify for the ER tax credit, an employer's business must either be suspended or partially suspended by a government order, like in Pennsylvania right now, or the employer's gross receipts are below 50% of the comparable 2019 quarter. In addition, there are restrictions based on the number of employees the business has on payroll. If an employer had 100 or fewer employees on average in 2019, then the ER tax credit is based on the wages paid to all employees, whether they actually worked or not. In other words, even if the employees worked full-time and got paid for full-time work, the employer still gets the credit in this instance. If an employer had 100 or fewer employees, if an employer had more than 100 employees on average in 2019, then the credit is allowed for only wages paid to employees who did not work during the calendar quarter. Please note that the ER tax credit may be creditable against payroll taxes, or an entity can apply for a refund with the IRS. The IRS has recently published the form. It's the IRS Form 7200 on the IRS website. So if you're looking to apply for a refund with your professional advisor, that form is available online. An entity's qualification for the ER tax credit will end upon a business becoming fully operational, or if the gross receipts of the organization for a quarter reach 80% of the comparable quarter. Please note that the ER tax credit may be reduced by payroll tax credits provided by the Family First Coronavirus Response Act. However, some of those payroll tax credits under the Family First Act apply to businesses with 500 employees or fewer. I bring that up because you cannot apply for a PPP loan and claim the ER tax credit. From a policy-making standpoint, they created the ER tax credit to help businesses who didn't qualify for the PPP loan, so they're not allowing you to double dip in these situations. And given that the ER tax credits vary from business to business, it's important to consult with your accountant or attorney to confirm the amount of tax credits and your qualification. So in addition to PPP and the ER tax credit, there is a pre-CARES Loan Act program that struggling businesses may apply for with the SBA during this time of the COVID-19 pandemic. Said loan program is known as the Economic Injury Disaster Loan Program, also known as EIDL. So who qualifies for an EIDL? Like PPP loans, to qualify for an EIDL, you must have less than 500 employees or be a business deemed small based on your NAICS code. If you have more than 500 employees and you're wondering if your business would be deemed small, there is an online size tool on the SBA website where you can plug in your NAICS code to see where you stand in relation to applying for an EIDL loan. Also, a requirement is that your business has to be located in an area where a disaster has been declared. That's easy for Pennsylvania organizations, given that a disaster was declared due to the COVID-19 pandemic on March 19th. So what can EIDLs be used for? They can be used for working capital needs, paying fixed debts, payroll, accounts payable, and paying other bills that could have been paid had the disaster not occurred. In terms of, unlike PPP PPP loans, EIDLs have slightly less favorable terms. They don't have a forgiveness aspect to them. The statutory limit of amount of your loan under EIDL is $2 million. I also wanted to note that right now applicants can get an advance of $10,000 within 3 days of applying. So make sure if you do apply, your loan will be, make sure it's over $10,000. And what's great about this is if you're denied for an EIDL, there's no requirement to repay. So it's a good way right now to get some cash in the bank immediately as possible. The loan is limited based on the SBA's determination of economic injury. So you're going to provide your need, and they're going to assess whether or not that need is appropriate given what's going on in your area. The interest rate for small businesses is 3.75%, and for private nonprofit organizations, it's 2.75%. The maximum term on EIDLs is 30 years. However, terms are determined on a case-by-case basis based on the borrower's ability to repay. So the SBA will work with you on the term of the loan. From a security standpoint, SBA requires collateral for all EIDLs that are over $25,000. Real estate is an acceptable form of collateral in these cases. I also wanted to note the CARES Act have modified security requirements in relation to personal guarantees. Right now, EIDLs less than $200,000 will not require personal guarantees. The SBA has said it will not decline a loan for lack of collateral, but it will require a borrower to pledge something if available. So the SBA will be flexible with you in terms of the security for the EIDL, but you'll just have to provide all information and work with them. So how does one apply for an EIDL? Unlike the PPP, as Elliott was talking about, a borrower does not have to apply for an EIDL through a bank or a designated SBA lender. Applicants can apply directly with the SBA online or via mail. I highly suggest applying online. They have an application portal that's real easy to use. In terms of processing your application and getting that 10 grand advance quickly, it's best using the online application than using the mail right now to get your funds as quick as possible. Upon filing such applications, please note that you'll have to provide the following documents in applying for an EIDL. So there's the SBA Form 5, which is the EIDL application. This is a lot like the sample PPP application Elliott was discussing before. It requires you to state how many employees you have, where you are located in terms of whether or not such location is deemed a disaster area. There will be also certifications in which you're making that your business qualifies for an EIDL, and just so they have you on the hook, so you're not committing any fraud, and it's going to be all on you on this application. In addition, you'll have to provide a tax information authorization form, which is the IRS Form 456T. This allows the SBA to access your tax records to confirm that what you're stating on your application is true and correct. You'll also have to provide a complete copy of a recent federal income tax return with all schedules. This can be the 2019 return if you haven't applied if you haven't filed your 2019 return yet, then it would be your 2018 return. You'll also have to provide the SBA Form 413. This is a personal financial statement, they call it. Essentially what it is, it's this form interim financial statement. There's a form balance sheet you'll have to fill out, and a form income statement, just so they can get a snapshot of where you're at. You'll also have to provide an SBA Form 2202. This form is a schedule of all the current loans existing loans you have, and your lender's contact information, just so the SBA is aware of what's out there. So after applying, in terms of strategy, you can apply for a PPP and EIDL right now. wanted to bring up the interplay between these because there's been a lot of talk on that. But I want you to note that a borrower cannot use a PPP loan and an EIDL for the same purposes. So what we've been advising people is, if they're looking to go both routes, is if you have a real payroll cost need, apply for PPP and use only PPP for your payroll costs. And then if you have additional working capital needs, apply for the EIDL and only use the EIDL loan funds for those working capital needs. And also, I wanted to note that if you received a $10,000 advance through EIDL, that may reduce your PPP forgiveness. We'll be getting more guidance on PPP forgiveness from the SBA as they are going to be posting more rules relating to that area soon. So from a federal loan and assistance, from the federal loan and assistance programs, we now move to what's available through the Commonwealth of Pennsylvania. As you may have seen on the Chamber website, loans are no longer available through the Pennsylvania COVID-19 Working Capital Access Program. So right now, borrowers will need to seek standard business loans through the Pennsylvania Department of Community and Economic Development. So what are these loans? Through the Pennsylvania Department of Community and Economic Development, businesses and organizations may apply for assistance from the Pennsylvania Industrial Development Authority, also known as PIDA, their small business loan program. So these PIDA loans are project-specific loans that can be used for land and building acquisitions, construction and renovation costs, machinery and equipment purchases, working capital, accounts receivable lines of credit, and working capital term loans. Now, I want to, when we're looking at the PIDA loans right now, a lot of people, given the COVID-19 pandemic, are looking for working capital needs. So I'm going to only focus on the working capital loans through PIDA. And also, I don't want, you see that the loans are project specific. In terms of qualifying for PIDA loans, I also want to note that in relation to the working capital loans, you do not have to have a particular new project that you want to use for working capital. It can be, so for example, if you're a manufacturer and you need, you have supply issues during this pandemic, you need certain components to go into your finished product. PIDA just wants to know, or your PIDA loan provider just wants to know, okay, you need how many components, provide information relating to invoices to support how you're going to use that working capital. They just want a working capital plan as opposed to you having some potential building acquisition or renovation on the other types of PIDA loans you can receive. So for the working capital loans, what are we looking at in regards to terms? For retail and service-based organizations, PIDA loans will fund up to 50% of your project, your AKA your working capital plan. For manufacturing and other industrial-based organizations, they'll currently provide up to $100,000 in working capital. These are 3-year loans. The working capital term loans are generally secured by a first lien on inventory and receivables of the borrower. However, personal guarantees may be required. Borrowers are also responsible for any applicable closing costs and associated fees charged by the applicable lender organization. So how do I apply and go for a PIDA loan? So PIDA loans are packaged and underwritten by a network of certified economic development organization, or as I like to call CEDOs, that partner with PIDA. Potential borrowers must apply for PIDA loans through their county's CEDOs. Erie County CEDOs are Corey Area Industrial Development Corporation, the Progress Fund, and the Northwest Pennsylvania Regional Planning Commission. Now, in regards to processing the standard PIDA loans that I'm talking about, I've recently talked about, or I'm talking about right now, I've reached out to the Progress Fund and the Northwest Pennsylvania Regional Planning Commission yesterday to see what their status is in processing these loans. The Progress Fund told their program director told me that they've been super busy with processing the COVID-19 working capital access loans, so they're not taking any PIDA applications right now. However, I spoke to the loan program director of the Northwest Pennsylvania Regional Planning Commission, and they are accepting PIDA applications. So if you are looking for funds right now through this loan program, I highly suggest contacting the Northwestern Pennsylvania Regional Planning Commission and starting your application and providing the supporting information to that CEDO so you can get all set with hopefully a working capital loan. So from the PA loan and assistance programs, we now move to what's currently available at the local level in Erie County. Loans, as you may have also seen on the Chamber website, loans and assistance are no longer available through the Erie County Redevelopment Authority Small Business Emergency Loan Fund. So what's available in Erie County right now? Well, at the local level, borrowers will need to seek a small business loan through the Erie County Gaming Revenue Authority, ECGRA. ECGRA is currently providing loans to small businesses and nonprofits that can demonstrate negative financial impact as a result of the COVID-19 pandemic. These loans are fairly attractive in the sense that they have flexible repayment terms with no payment required for 3 months, interest rates at 4% for small businesses, 3% for nonprofits, and they're granting loans from $5,000 up to $50,000. So who is eligible for ECGRA's small business loan program? So nonprofits located in Erie County, and it's also recommended that small businesses under 25 employees located in Erie County that meet any of the following classifications. So minority, women, immigrant, or veteran-owned businesses, or businesses or nonprofits that serve economically distressed neighborhoods in Erie County. I want to note currently there are flexibility with these requirements. ECGRA's willing to take a look at your application if you're borderline on certain things. For example, if you can't meet the 25 employee benchmark in terms of being a small business, if you have like 26 or 27 employees, then they'll still apply and they'll try to work with you with what's available. So how do you apply for an ECGRA small business loan? Well, the ECGRA Small Business Loan Fund is administered by Bridgeway Capital. All businesses can apply for a small business loan by filling out an online application through the ECGRA website. You can see the little logo that I took off the website that directs you to the Bridgeway website that will point you to an online application portal where you'll provide information relating to your business, the qualifying factors, and also your amount of need that you're requesting. I've been told that the ECGRA loans, there has been already applicants being processed for this small business loan fund. So I highly advise, especially with all these loans, to get on it as quick as possible as funds are running out. And there may be new things that come out that keep your ear to the ground if you get denied or not able to get any funds from the local or state level, to just keep your ear to the ground and be creative in this sense. And then also be as kind to the lenders as possible. Through my calls with them recently, they're kind of working remotely, and it's been crazy right now. They're having a tough time as much as everybody else is. So the kinder and more respectful you are to lenders, they'll probably process your loans quicker and efficiently. So with that, I think, Elliott, are we kicking it to questions?
Yeah, that would absolutely be fine. I was just kind of going through the questions myself that I've seen come up here. Amanda, do you want to handle those, or how do you want to handle this?
Yeah, I think if you want to just start addressing the questions that have come through for the entire presentation, just work through them, that would be great.
Yeah, so let me, I've got a question here. I'll try to go through this. Okay, so let me do this first one here. It said, I have a question regarding the PPP that is specific to covering payroll in the nonprofit sector. Specifically, the COVID-19 crisis has caused the need to hire additional employees to help the population served by the nonprofit. Can the PPP loan be used to cover the new hiring need? Can PPP loan money be used by the nonprofit to cover compensation for this new employee, or does it apply only to cover existing staff prior to COVID-19? The answer to the question is the loan funds can be used for any employee payroll costs following an origination date. In addition, if this hiring need, and presumably based upon the question it was, is done through the 8-week period following loan origination, that would so qualify for forgiveness as well, as long as it was a proper payroll cost, which presumably from the facts presented it would be. So I hope that answers the question. We have an affiliation
Elliot, real
question.
quick, sorry to interrupt. Your audio's a little choppy. I'm not sure if there's an issue with your connection or your mic. You're just a little hard to understand. I'm getting some comments that it's hard to understand you.
Okay, I apologize. Bill, there is a question about I'm looking at it from Michelle Myotoshevsky about bundling and affiliation rules. Do you want to take that?
Let me just try to find that question real quick.
Can you hear me?
Yes.
I can verbally go over the question for you if you'd like.
Yeah, that'd be great.
So my question is, I own 3 companies. One is an employee-based company, so I'm pretty clear in understanding the PPP regulations for that one. Second company is a properties company, and I'm a sole owner for all 3 of these companies. The second company does have a loan, so I'm wondering in the PPP, because I own all 3 companies, can I put the interest to that loan into the originating PPP loan? And my third company, I actually take an employee payment out of that. Can that be incorporated into the PPP, or do I need to do the second application process that's coming out later this week?
Okay. Sorry. Let me. So, your question is mainly based on use, correct? Use of PPP funds.
Correct. Can I merge all 3 companies into one application because I'm the sole owner of all 3? Or do I have to have independent applications for each one of those and their uses?
So this is going to be based off of affiliation rules. So you're the sole. So you're saying you're the sole owner of all the entities, correct?
Correct.
So
yeah, Bill, I can jump in if that's okay. We don't want to get confused from the affiliation rules versus uses. Separate applications would be needed for each business, and uses would be limited to that. The affiliation rules speak to whether you qualify for the loan, not its uses. Does that clear it up, Michelle?
Yes, it does. It was the loan for the interest that's a separate company that has no employees, and that's the one I was trying to clarify. Thank you.
Correct, yes. The next question we have here, I'm looking as I'm down, is what about workers' comp expense or the employer part of Social Security and Medicare tax? So basically, I would bump in, and there is no specific guidance on this question, but I would bump in the workers' comp expense as I think it would be an includable payroll cost, as well as the employer part of the Social Security and Medicare tax. That is, we've received recent guidance on this with the past week, and from the understanding of the way things stand now, those would be included for the purposes of calculating your payroll cost. As it relates to forgiveness, however, the workers' comp expense would be allowed to be forgiveness as a state sort of tax, so to speak. But the federal part would not be "quote unquote" forgivable under the forgiveness program. So that's kind of the rub between how those two things work together. The next question I'm throwing down here: can you use the loan for other purposes, negating the forgiveness, and just pay back the loan at 1% for 2 years? Technically, but it has to be it has to be utilized for it has to be utilized for anything that would be qualifiable under the 7A program. So again, you may want to make sure that proper uses of funds are utilized for those purposes. And I will note that there is specific guidance on this topic. The question from Brett here set forth in the interim regulations that was published on the fact sheet from the Department of the Treasury. I have a question. Next question here from Jimmy J. For new businesses in the fourth quarter of 2019, which would not have historical 19 expenses, how does the SBA set its baseline for lending and forgiveness? There was another question similar that I saw later on, more recently, towards the end of the program, that said, I've just started up with employees in 2020. Do I qualify? I'm going to otherwise address these two together. You first of all, any newer businesses, as long as you had employees and were operating or paid contractors prior to February 15th of this year, do qualify. How are we going to calculate those sorts of things? Throughout the guidance that has been issued in both the regulations and fact sheets, calculated by the Treasury, basically puts this into what I'll call a good faith standard on behalf of the applicant. Banks are not required to double check, as long as there's a good faith estimate of what our monthly expenses would be, then that's what they're going for. They're trying to make this not overly burdensome. Whether the banks actually implement that is, of course, I know I cannot control that, but I would say from this question, Jay, as well as the later that I saw, you use your best good faith estimate as to what your payroll costs would be. The next question I see here.
Real quick, I just want to interrupt, Elliot. I apologize. I'm getting a lot of comments that it's nearly impossible to understand you just with the sound issues. I'm not sure what happened because you were coming in clear perfectly earlier. So I'm wondering if maybe the best way to proceed with the questions is to just put them in a document and have you and Bill respond to those, and then we can send them out to everybody via email. Would that be okay?
Sure, yeah. I apologize for the back, I guess. We did try this and it worked great, so.
Yeah, I'm not sure what happened. That was strange. So, all right, well, I'm going to say let's stop here. If you have any other questions, just make sure you submit them. Either you've got the contact information for both Elliot and Bill up there on the screen if you want to reach out to them directly. And then we'll just make sure we capture all the questions that were asked already in the presentation, and we'll get those in a document and answered so we can get those out to you from that point. So again, I apologize for the issues with the audio. We're not 100% sure what happened between the beginning of the presentation and now, but another quick note just as we wrap up here, You will all be getting a follow-up email with the link to the replay of the presentation, as well as the slides, I believe. Is that okay with both of you, Elliott and Bill?
Yes.
Okay, so we'll get the slides out to all of you as well. And again, we have their contact information up here on the screen. I will provide that in the email as well. And then there will be a survey link, just 5 quick questions for us to capture some information from you as the attendees on, you know, whether or not we covered everything you wanted us to cover, of course, minus the question and answer portion in this seminar, but also to capture some information about additional topics that you'd be interested in learning about. So if you'd please just take a couple of minutes, like I said, it's only 5 questions, and fill that out for us, we would appreciate it. So again, thank you to Elliott and to Bill, our presenters from the Knox firm. Anything to add, either of you, before we close it out?
Thank you. Just submit your questions and we can get that, and we'll get right back as soon as we get that list as soon as possible.
Okay, very good. All right, well, thank you again for joining us, everyone, and keep an eye on your inboxes for the email from us sometime later this afternoon. And to all of you, just continue to stay well and stay home.